Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that from a monthly standpoint, we have a market which is rejecting to the upside a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. So every time that the market tested this area, it got rejected to the upside quite aggressively. And at the moment, we just had yet another test of the exact same zone. The market already started rejecting it to the upside. So more bullish price action could be expected away from this level. So the monthly time frame at the moment does seem quite bullish. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that the market has just created a massive move to the downside. However, it's just approached right now a quite strong historical structure level, which is this zone here. This was acting as previous weekly resistance from which all this move to the downside was created. Then the market broke above the zone with this impulse. And what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. So the market then tested the area as previous resistance turned support, respected it as support, and at the moment the market is testing again this exact same level from which there is a possibility of a potential rejection to the upside, considering that the market is also already rejecting that historical support that we have previously identified from a monthly standpoint. So here in the weekly, in my opinion, there is a good probability of seeing a potential rejection to the upside away from this weekly support. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that we just had a massive impulse to the downside. Now, increasing this move to the downside, the market has also printed this overextended M pattern. And in general, after the creation of an overextended M pattern, there is an increased probability of seeing a potential rejection to the upside away from the zone. So from a daily perspective, if we are to identify a first potential upside target based on this pattern, we would have to take our Fibonacci from the high to the low of this impulse leg, which would give us a first upside target at this 0.32 of the Fibonacci taken on the impulse leg. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the GBP, the first thing to keep in mind is that if we're looking at the data for the GBP, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. So what we can see here is that with the last reports on GBPUSD, net positions have been increased. We went from having 62.9k net positions up to 93.7k net positions. So essentially showing a strong increase of the net positioning with 6.1k longs added just with the last report and 600 shorts getting closed. Now this shows how institutions are moving back to the bullish side for the GBPUSD with 161.4k longs compared to only 67.7k shorts. So in a situation like this, it means that there is an increased probability, since institutions are longing inside of this area, that we could have a potential rejection to the upside away from this zone. So What would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to go and complete this overextended M pattern at least at the 0.32 of the Fibonacci taken on this impulse leg. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.